All right. So, team, Mavure Income Tax Act, let me just open the legislation here. So, the soft copy. This is my text ledge. So, team, the upper topic I'm not about income tax. If you are in your income tax, besides your what do you call it? Your admin side. So mchona kuti in income tax team, kune number one, kune two. Number one, it's either we have an income or a deduction. So Zimbra, inongotasa zvinu two team. Do you have income? Oh, so from your income, a taxpayer is allowed to claim for what you call deductions. So deductions, in simple terms, this is any expenditure you incurred when you were earning such income. So you are being allowed to claim for deductions for anything you incurred in order for you to earn the income. And so I want to go here to show you something. I want to go to section 8. So team, so if I go to my section 8, idarika irinoboa researchable. So I want to go to the general definition of what is gross income. And up. So gross income means what? So from your perspective here, it's the total amount received by, accrued in favor of a person and have been received or have been accrued in any year of assessment from a source within or deemed to be within Zimbabwe. Excluding any amounts by virtue of any of the following. When it is proved to be part of a taxpayer to be capital in nature. Then we go to section 15.2a. Section 15.2a yakuti doti the deduction chi. Which is your section 15.2a. Yakuti a deduction again is expenditure or losses incurred for the purpose of or in the production of income, again proved by the taxpayer, it's not capital in nature. So mukatarisa in all the circumstances, team, who is supposed to prove that this is revenue or capital in nature? Hello? Who is supposed to prove?
The taxpayer.
Is the taxpayer. So exam team. And every exam, the anticipation of the examiner team, it's the taxpayer who proves, not the Zimra. So to Zimra, yes, you on it's income. Everything you get its income. Then, so ukachitarisa apa team. So examiner kana achitesta, has to test the whole formula. Anogona kungotrigger amount chet ish. So you want to know what chinonzi amount, and even which case law inodilane amount. Anogona kungotrigger received by chete. Per definition yes, So zvenyu zvekuti muexam uda kutinyorera amount received by accrued deemed to team izvozvo hazvidiwe kuexam. Ingonyora chatrigwa chete, not the whole definition. Tikunzwisana? So focus only what has been triggered. Ndizvoka? Focus only on what has been triggered. Anything chisina kutrigwa na examiner, please ignore. Usanyore chinhu chisina kutrigwa. Mero handiri kubatika. All right. Then I'm going to deal with kachiti not calculate. So chinonzi amount chi, money or any other. So ndo paya pekuti vanogona kuti the company was facing challenges. So they paid part of the income. Maybe vanobva vatokudza kuti takashandisa chi get this right. Vanotokudza kuti takabva vakapiwa grocery. But that grocery represents chi the salary. Ndizvoka? So it becomes an amount. So it's income. Those don't prove. Ndizvoka? Then received by. What triggers receipt of an amount? Ndizvoere? So when a taxpayer can use the amount for their own benefit, then if you go to our case law, we've got what we call the Gildenized case. Ndizvoka? Then they put the Ishema deposits ayo. So mukatarisa apa team, havasi kundipa the context yema cases. So vanogona kutrigger accrued, vanogona kutrigger deemed, vanogona kutrigger source, vanogona kutrigger deemed source, votrigger ish. Ndizvoka? Saka inini hangu ndichiziva kuti ma-students angu ichi ndiri kukushareai team ichi this thing, but ndichachishare chiri pa. All right, I'm going to share with you. Ndizvoka? So the big picture, taxable income starts with the two gatekeepers. Ndizvoere? There is the gross income. Should the receipt or accrual enter the tax net? Ndizvoere? Should it be included in the tax net up? So it can be amount. Chinoita chipinde mu tax net. Amount here, received here. Is it during the year from Zimbabwe source or deemed plus not capital unless specifically included? I'm going to share with you this. Should not. So if yes, include in gross income. But Tim, get this right, before exemption, if no, consider CGT. VAT with you know the exemption team. It can income, but zonzi inozoiexempt but izimura yakazo
aise Grace muri kubreaka or network yangu.
Wanted to say the same. It looks like in network, yes.
Hello? Hello?
Yes, Magunzwigo.
Great. So, team, so these are the two gatekeepers, income tax. Then, team, the transfer pricing. The transfer pricing, team, tererai. It's not a new context, gross income tax. Tingoripa income or per deduction. But the question, pakachitika transfer pricing, ndakunyorerai up, out more. Ndoziva ma-students angu ndizvoka TP. So pakuya issue transfer pricing team, the concept or the issue iripo, I'm still under the old variable definition gross income is part up team. Is it amount received, accrued, deemed, etc? So the question is, if it's income, how much should be included in the income? If we are dealing with the general deduction, on the deduction side, how much should be allowable as a deduction? So if it's the general deduction, the question is how much should be allowable as a deduction? So TP, it's not introducing a new concept. So mukatasa TP team, the main issue or the main aspect iripo, it's triggered after identifying a related part income or expense. So mukupabate team. Ndatotanga ndatoprova kuti aiwa income or ndatoprova kuti this is an expenditure law in terms of the section 8, section 15(2)(a). But the moment there is a related part, ndakuchiti gross income may be understated or deductions can be overstated because it's a related part. So you need to ask yourself the following: are the parties associates? Remember, ndatotanga ndati amount received. Izoka ndotoprova kuti conclusion yangu gross income. But the question is, how much should be taxed or should be included in my taxable income, the amount? So that was kuzokasika kuidentify kuti vazhinji anobva adangotangira transfer pricing. So if there is a related part, first you have to understand, are the parties associates? Ndakuenda ku section 2 could define what is an associate. Then next thing I have to ask myself, is there a controlled transaction? Then is the pricing even at arm's length? So the moment we are saying, if it's a controlled transaction, the selling price might not be at arm's length. You know, arm's length, that's the normal price here. Within the market, or when you are selling to someone who is external, who is not a related party. So the question is, which method supported the price? Tab trigger section 35. So section 98B and section 35. If not, if it's a controlled, adjust income or deduction under section 98 and 35th schedule. Mukupabati make sense. But zvirikubva pachi, zvirikungobva pa the fact yekuti is it an income? But the question is, how much is allowable as a deduction? Happy days. Trukuirana team. True make sense. But in the chiripa gross income up, same gross income. That's where so to zvirikubva income or deduction. But the question, because parties are related parties, I should ask parties, are the parties associate? Is there a control transaction? Is pricing at arm's length? Those do not build the discussion here question. Then if it's a double taxation relief, we have deemed good income it's from a source within Zimbabwe. But income in the from Zambia, from South Africa, from another country which is not Zimbabwe. Income here, but it's deemed or it's proved to be from a source within Zimbabwe. So it's triggered when income is. So the key or the underlying item team is is it from a source up? So the moment it's from a source within Zimbabwe, but it's in another country. So it's triggered when. So the circumstance when it's triggered matter. So when income, so my discussion income team. So ndikufana unoburitsa kuti gross income or so triggered when income tax source or source tax abroad. Gross income includes amount, but relief now. That's when section 91, 92, 93 comes into play. But yes, it's sourced from Zimbabwe. But where I have invested, the tax for again. So can I get a relief so that I'm not taxed twice? So relief may reduce the double tax. So the first thing, Tim, mention DT first if applicable. Otherwise, foreign tax credit or relief rules we use when foreign branch, foreign interest, secondment, or foreign withholding tax appears. So ndikatobatirwa tax in another country. But the main principle, the main underlying principle, Tim, they could understand that is there a double taxation agreement with that country, with Zimbabwe? Take that also into consideration. So this is your section 91, 92, 93. Then we have withholding tax. So withholding tax now, Tilkuma payment, we are making a payment to someone. So this is triggered by payment nature and the recipient status. So punishment 2, the payment's nature and the recipient status. So withholding tax is a collection mechanism or a final tax depending on the provision. So we need to identify the payment. The dividend, the interest, my fees, my royalties. I shared with you tine recording. Yandakakupa detailed transfer pricing and withholding tax. Confirm, Tim. And there's prove very good. Do you understand the difference between royalties, fees, etc.? Then we have my exemptions. Hello?
Confirmed.
All right. So, tikutofamba nemakarimwa kudhara handiti hatisi kutaura zvinhu zvinyowani. Ma-exemptions, Team, don't forget, ari kubva futi pa-income. They are triggered after gross income and before deductions. So tikuti some receipts are gross income, but not taxable due to the exemption. So, Team, so ndikuti nyaya yako ngaingogona kungobata kapa nai, ingobata kapa. And the relevant case laws affecting. So is it income? So the question, the moment you are saying it's income, then the next question you have to ask yourself, Mubabati, Vunzai, Tibatrani. So the trick with the tax, is it an income? Is it an income? So ndopani nyaya yedu. So nyaya yedu ipa income. So mukatasa exemptions, zvese zviri kungobva pa income. Allowances again to trigger when expenditure is capital but fail the general deduction formula. That's when we now say, however, section 15.2c as read with the fourth schedule allows for claiming of deductions, but we are starting from section 15.2a, expenditure or losses incurred for the purpose of trade or in the production of income proved not to be of a capital nature. So it should be proved that it's not of a capital nature. Happy days. So then also output VAT is not income if collected as tax. Input is not a deduction if recoverable. So mukupa battery team these key things. So these things, don't worry about these things. How do we answer? For example, if it's gross income, what's the issue? Identify the receipt or the accrual. Then the principal, in terms of section 8, an amount received by or accrued during the year from Zimbabwe source unless capital. Then application, apply the amount received, accrued source, capital, revenue, test to test effects. Then conclusion, include or exclude and mention if it's related to CGT withholding VAT were triggered. Then if it's the general deduction template team, first is the issue, identify expenditure, which is the issue. Then principle under section 15.2a, if actually incurred during the year, if it's not capital or it's prohibited. So we have section 16. So it starts from an expenditure, but because there are certain expenditure, yes, it's an expenditure, but it's prohibited in terms of section 16. So Mukwiwane answer template issue. Can we see the answer template team? I'm going to share with you this.
Say,
Yes.
kana mchiti issue mnenge mchiti.
All right. So kana ndichipindura muvhunzo, let me try to open a past paper for you. Tite zviri practical. Handiti? Issue ndo mostly the transaction or what has been triggered by the examiner. Blessing.
Yes, what's the difference between an issue ne principle? All right.
All right. Issue. All right. Let me use a practical question.
All right.
Let me use a practical question to simplify that for you. Let me just go into any past paper. Let me try to use any CAA past paper. All right, let me pick this one. Let me pick this one. For example, here, we're going to discuss the income tax treatment of transactions under debt funding. This section in the ends of LM 2023 year. So anonzima issues, though my transactions are under debt funding up. So if I go to scenario and go the debt funding pana, blessing. To good ones, kickstart of acquiring activities by LM was not easy road as the project was capital intensive, with the need to acquire several types of machinery and vehicles like limestone crushers, etc. Mukatasa condex team, aisati ya transaction, mukubabata. Ngotudzwa kuti vatange business zvaya zvakaoma, saka nekuda kwekuti vanoda equipment yakadai so neyakadai so. It's a context. It's not yet a transaction. But vazopfurira vachiti, to facilitate this KDC approved granting of loan to LM. So in other words, your one's in whose hands up, one's in the hands of LM. So in the kuna LM first issue yangu, they receive a loan, cannot first transaction, the loan received. Blessing. Don't you know the issue? Once this is I'll prove to you no separate a principle and one principle. Then amounting to 10,000 payable over 10 years. So another transaction, another issue. Loan it was repaid. It's an issue. Then each attract a loan interest. But for me now and kwanza kunyora loan interest. With an annual interest of 10%. Why this now kunyora interest? Interest in my laws we use what we call the common law principles. Interest usually follows the nature of the loan. Confirm. Interest could it deduction or capitalize, it depends to utilize Mariata querita yacho the loan. Ndizvo. Saka muri kuona kuti I can't discuss first. I can't put loan interest. Ndisati ndaziva kuti how was it utilized. Happy days. Then they proceeded to say, LM utilized the loan to acquire machinery. So ndakuti utilization of the loan. Ndizvoka. Vai utilize chi and number one, acquire machinery and motor vehicles. There actually my issues are kana kuti my transactions. Ndizvoka. Then what else? The other one was used for working capital requirements. Working capital requirements. Then ndochizonyora the loan interest. Why? Because the interest follows team. Kuti ndautilize chi up. So nda-identify my transactions. And another important thing, pamuku ndende roku exam, identify all the transactions, team. Hello? Ameno wakambo observe past paper. Nimaona pane panoiswa half mark text. Makazvoona. Ipo paine all those transactions and I list up. Iwongoona loan ne loan interest zviri tu. Unenge uchipiwa tuma half mark. Is it making sense? So those are my issues. Those are my transactions, blessing. Then let's go to the principle now. You know the principle now, these are my principle. Principle ndikudzoka ku legislation. Principle yangu income here in terms of our section 8. Is it an income? Up. Or is it a deduction in terms of section 15? 2A. This over. Hello, team. Are we following? Is it a deduction in terms of section 15.2a? Expenditure, losses to the extent they are incurred for the purpose of trade or in the production of income. But I must get him. Then, to the extent which they are expenditure or losses of a capital nature. So, you know the principle, blessing. Let me now deal with the principle. So the principle now, I'm coming back to this legislation. Income here, expenditure. So if I go back to my question now, let's start with loan received. So the moment we are receiving team, according to the taxpayer, income. Remember, they said, unless proved by the taxpayer that is capital in nature. Yep. Unless proved it's capital in nature. So if we go back now into our circumstance, we received a loan. So we have got loan received. So the issue is that loan an income or it's not an income. That's my issue. That loan received, is it income? So I go to the principle now. So the principles now, if I go to the principle, if I go to the mind map here, for the loan received, I can use this received by. That's principle. So amounts are received if they are for my own, amount is for their own use and the benefit. Then I can take the case law, geodenize case law. Or I could go the capital in nature route. Amounts are not included in gross income if they are capital in nature. Yep. Then, the application now, I want to link, remember that the application gap, team. There is application. So there is issue, there is principle, there is application, isn't it? So I want to apply the amount received, etc., based on the facts scenario. So in my circumstance here, Since it's a loan, if I go the received route, the loan was received, but we have an obligation to pay back the loan. Confirm. If we have got the obligation to pay back the loan, it means it was not for own use and benefit, because we are going to repay that loan. Therefore, I conclude which case law? There is a case law there. Irigo. And which case law? Girl denies. Can use that one. Then there's the Jane case, which talks about the obligation to repay. Then I can conclude, safely conclude here. Therefore, this loan amount was not received. Maone renda prove what it's not received. Then I conclude it's not included in gross income. Ndio zvekutaurwa nekaka. Ask him tibatirani. Ndo izvi. Ndo zvandakubuditsira apa izvi. Apa. Zviri kumeka sense here.
Zvabatika sir.
Other questions? Other questions, Tip? Bvunzai tikupindure musasare muchinzwa kubirirwa. Kozwe exam uko. Toda kuroverwa soterwa zvinhu zvin detail. All right, so let me leave that one. Let me go back here. So that's even on the deduction. Identify the expenditure. Principle under section 15.2a, expenditure is if actually incurred in the production, etc. But it is not capital, which is prohibited. Then application, apply each requirement in section 16 future. Then we conclude, either we deduct, we disallow, we apportion, or we go to capital allowance. Those are the things you build a discussion. So in my case here, I can even go again back to this question. Tim, there is loan repayment. The loan repayments, the first question, amount are excluded. This is a payment. So I go to section 15.2, expenditure or losses. So expenditure, which is of a capital nature, is not allowable as a deduction. Another key thing, Tim, it's not your discussion in Okupa conclusion. Zvatiri kutodzidzisana izvi ndo zvinofanirwa kupa conclusion kuti loan repayment or your basic O-level principles, your capital versus revenue. To those who did O-level accounting, is it capital in expenditure? Is it revenue expenditure? Is it a capital receipt? Is it a revenue receipt? Muchiri kuzviziva here zvemuna Frankwood? All right, I think ndinenge ndaana Frankwood. Taurai neni team. I want to show you something. Kutobva that conclusion. This Frankwood. Muchiri kuriziva here bhuku iri. Panobva the distinction. Patoneka topic amaitonzi iyi asset here. Is it capital in nature here or revenue in nature? Ndizvoka patoneka part kamenzi it's capital here in nature pawazoti capital revenue in nature. Handichanyatsoziva kari papi, but it's there. Kavaitongokubuditsira kuti capital versus revenue in nature. Wotokuti iyi capital here, iyi revenue here. I think it was kuma introductions chaiko, if not mistaken. So the basic double entry ndokunotobvira kuti iyi capital here, iyi revenue here, etc. Ndokunotobva the basic principle up kuti assets liability here, capital expenditure here, revenue expenditure. Fine. Let's go back. So No to conclude the loan repayment over 10 years. It's long term in nature. Mostly revenue things are your working capital, your current assets, your minus your current. The moment something is under non-current liabilities or it's under non-current assets, it becomes capital in nature. So we go back. So the first thing, Tim, and the whole definition, expenditure in or losses incurred for the purpose in the production. That's one a conclusion. This is a loan repayment. The moment it's a loan repayment, it's capital in nature. If it's capital in nature, therefore, I simply go to my amounts which are capital in nature are excluded in are not allowable as a deduction. Amounts which are capital in nature are not allowable as a deduction. Then next, I definitely have to prove now to the taxpayer why am I saying loan repayment is capital in nature? I can see a hand.
Oh, I just wanted help with how we discuss a change of intention. Like maybe an asset was used in a different way, and then we're changing how we're using it. I just want the flow of how we have to discuss it.
In terms of what?
So let's say we get an asset, and the what we had planned to use it for, maybe it was initially for maybe an office space. Then we decide to change what we had planned to use it for. So the one where we change. So I just want to understand how we would play around that. How would you discuss it so that you can get marks?
Or if there is a change in intention, that's what you are referring to.
Yes.
So the moment if there is a change in intention, let's say I've bought something as inventory, isn't it? Then later I decide to capitalize that thing, isn't it? So the question is, if you had claimed a deduction, isn't it? Because the reason why Zimra ichikupa deduction, vari kuzonokubatira ku-income uku senera. Kuti iwewe handiti pawatenga ukaholder something for resale, you can claim deduction in the year incurred. Handitika. Because vatongoassume kuti since it's a working capital item, chichabva chatongogenerator revenue in that particular year. Ukachinochinja use now, takuchitoti iwewe une deduction kaya wanga wakaclaima ndoyatakuteerawo iyoyo yo inofanira kunge yacapital allowance, but mostly in the income tax we don't deal with that in detail. Mostly uchiona ku-VAT ndikwatinozonokurova nema-VAT adjustments andakashare mugroup senera.
Okay, so when discussing, do I start from could initially this and we allowed the deduction, and then after that those on to this inventory has been capitalized, therefore there's been a change of intention, and then how does the flow, or it's depending on how the scenario is regarding the issue.
So the question, in the same way, the change yaitika rini was kuti kazhinji inventory is something chagara chinofanirwa kuutilizwa in 1 year. Sandizvere. So you bought inventory, but instead of expensing it, ndizvoka, you capitalize it, ndizvo. So to put in accounting, it's sitting as an asset, is stock. In tax, we need to check if deduction is allowable. And in this,
Yes.
so inventory, mostly it's not allowable, automatically deductible when purchased. Instead, tax chazoshandisa the trading stock formula, pachato your opening stock plus purchases minus closing stock. That's when you get your cost of sales. So your cost of sales becomes your deduction.
Mm-hmm.
So if you just capitalize inventory, you have not yet claimed the deduction. Don't forget that. So tax only allows deduction when the inventory is used, sold, or consumed. A good example, and is ukupa battery. So tukuti iwewe ichangonopinda kana iri sekuti inventory because issue yako iri kubva unless ukuti yanga iri asset. Was it an asset for resale or for use in the business? Kana ukuti tangati your context ukuti sekuti for example tanga takatenga building handed for use
Yes.
and we change to sell ndizvo. But the question again takuchenda kuti the principle of intention ndizvo.
Yes.
So if you had first of all yanga iri capital, then later we change to be sold trading stock ndizvo. So issue yedu nyaya yedu inongotedzwa nezimura i1 ndizvoka. So you capitalize it, so it's not deductible ndizvoka. You can claim for capital allowance, but pakazoita the change in intention now ya trading. So when it changes from capital to trading, it is now treated as stock. Saka, but we bring it to inventory at market value. Ukubabata. So chekutanga, I need to identify the change in intention. So before capital, so no deduction allowable. Now trading stock, so it's deductible through the stock system. So stock system, we are not opening stock at purchases. So we bring it into trading stock. At which value? We use the fair value, the market price. If we're buying it now, what price will we be included it? That's how it ended.
Yeah.
Then yakuchinopinda under cost of sales. Remember, I didn't know that inventory yako not opening inventory at purchases less closing inventory. That's why which is on the trading inventory. It's a special inclusion in gross income. So your deduction comes through the cost of sales now.
Okay.
Ameno
And then sister, thank you, sir.
All right. Any other questions, Tim? All right. Let's proceed. So, my principles and it up, Tim. So it's your identify your expenditure, the principle. Then we go to the application, this yoga, then your conclusion. So your complete solution point, Tim. Issue, principle, application. For application include your case laws. Then you conclude. Is it income? Is it not income? For expenditure, again, it's your issue, your principle, which is the general deduction formula, your application, apply, and then your conclusion. So a complete solution point should give all those things. And then funny issue source team. That's another important thing. So per source, let me go for the per question ish. The same question and ish. I want to show you something. Trigger source. If you can see here, foreign sales up. KDC ended serves the Zambian market through a branch that is established in Zambia. Mukubabate here team. Through a branch that is established in Zambia. The branch is a separate accounting system. The branch is a separate accounting system. And decisions are made at the branch. In 2023, the Zambian branch sold 20 tons of cement when the exchange rate was this. All cement is manufactured in Zimbabwe and transferred to the Zambian branch. Mapabata team. So, Bataimazwi team. If we are in income tax team, tiri worried about the source of those foreign sales. What's the source? But if you go to VAT, hakuna principle, tiri worried ne issue independent branch. Supply to an independent branch. That's what you should take into consideration. There is a supply to an independent what? Branch. So if you can understand the dynamics team, so how do you prove source up? How do you prove source? So source is determined by the originating cause, where the cause is located. Identify the income producing activity and location. If multiple activities, determine the dominant activity. Then conclusion, Zimbabwe source or deemed the source. Then consider DTA, NEMA foreign tax relief. Then is it capital versus revenue template? So all these things I'm going to share with you, please. I'm going to share with you. Let's take it step by step. Then team, this is, I put mean practice questions with the expected direction, isn't it? So source like if manufacturers dominant, originating cause, etc. That's things. Then marking guide, what CTA marks or IAC marks? Correctly identifying transaction or issue from facts. State relevant section, e.g. section 8 or section 15. State the correct principle in simple words. Use correct case law only where it supports the issue. Apply principle to exact facts. Do not write textbook only. Give a clear conclusion. Taxable, not taxable. Deductible, not deductible. Then mention connected issue. Pane TP, pane withholding, pane DT, pane VT, pane CGT, pane ma exemptions. Team, izvi ndizvo zvandinoda kuona muchiitawo kuexam izvi. Tiri kubatika here team? All right. So then another issue. I think pane panda summarize my case laws. Up. In this same document, team, pane summary, yema case law, table, facts, principle, and the link. Mukubabate here team. Received by Golden Eyes. Inoburitsa chi, where to use it? Pama deposit, pama trust money, pama refundable amounts, loans, proceeds. Jane case, when can we use it? Latgan, Delphos, CIA versus Butcher, Brumeira, Visa, George Forest, New State areas. When can I use those cases? Port Elizabeth. When can I use Sub Niger versus CIR, Loki Brothers, CIR, Transvaal, etc. Hello? So I've included it again. So the main issue, team, is coming from the definitions. So the two definitions, is it income? Is it a deduction? And this will can't add more, can't deduct. Questions, team. So tax always identify all transactions. This is okay. Questions, Funzai. Then, team, what's the difference between an expenditure and a loss? Expenditure, team, it's something which is voluntary. This other losses, it's not voluntary. And then another key thing, can we distinguish between in the production of income and for the purpose of trade? So mostly you students, you confuse these two, but they test two different things, Tim. For the purpose of trade, it simply means, does this expense relate to the business at all? Does it relate to the business at all? So this is about connection to the trade or business activity. For example, office rent, it relates to trade, and it staff salaries relates to trade. Advertising relates to trade. But it has not personal groceries now. They are not to trade. Private holiday, not trade. So it's not trade. So is this expense connected to running the business? For the purpose of. Then in the production of income, did this expense actually help generate income? Did this expense actually help generate income? So this is about closeness to earning income. So it's closeness to earning income. So example, think of your cost of sales. Isn't it? They directly generate what? Revenue. Think about commission paid to a sales agent. It helps earn the income. Think about marketing for product sales. They create income. But if you go to things like donation, there is no business benefit there. Fines and penalties, expenses too remote from operations. So understand. So did this expense contribute to earning income? So the real difference, purpose of trade is connection to business. It's broad. But production of income, it's contribution to income, which is narrow, isn't it? But how do they work together? Isn't it? Is it for trade? Does it help to earn income? So like staff salary, is it for trade? Yes. Produces income? Yes. Deductible? Yes. Fines for traffic offenses. For trade, yes, it happened during the week. But does it produce income? Penalty does not generate income. So it's not deductible. For advertising campaign, is it for trade? Yes. Does it produce income? Yes. Therefore deductible. So trade team simply means business connection. Production, it's income generation. So expenses incurred for the purpose of trade must relate to the taxpayer business activities broadly, while expenses incurred in the production must have a close and direct link to the earning of income. So mama test, they can pass the trade test, but can fail production test. So that's a basic principle. So understand, then capital in nature. Let's go again to my short question here. For example, we acquired machinery and motor vehicles. Again, we acquired. So that's an expenditure. But please, how do you start your discussion? We start from section 15 to A. Expenditure. This is machinery which is going to be used. It's not for resale. So it's expenditure which is of a capital in nature is not allowable as a deduction. Expenditure which is of a capital nature is not allowable as a deduction. But I must with him. Then the next question you have to ask yourself, why are you saying it's of a capital nature? So machinery and motor vehicles, they are going to be used over a long period of time. So they've got an enduring benefit in terms of George Forrest's case, isn't it? So the moment it has got an enduring benefit, Takuno conclude that it's capital in nature. Then conclude, therefore, it's not allowable as a deduction, but it's a sub-conclusion. Then I go to the other side, however, section 15.2CA now. Section 15.2C. Yakuchitaura zvema capital chi allowances. If it's used for the purpose of trade in the production of income. So it need the right to use that asset in the production of income. Happy days. South Africa yagoiswa World Cup. All right. And people are saying about now to support Mexico to South Africa idyiwe. All right, because of your relatives. Let's proceed. So, team Ndabatika. Ndabatika.
Yes, zviri kubatika sei.
So that's how you build. So I've created this cheat sheet for you. So I'm going to share it, but in a in a read-only template. So I'm going to share a link. And so if you can check here, I was even giving practical examples. In this one, team, I'm going to put it on YouTube. So team, that's the basic principle. So you need to appreciate and understand general deduction key formula. So good night, team. Tomorrow. Tomorrow. Tapedza pane zvimwe zvamuchada kuwedzerwera. Handida kupai toti process yese.
Say 2 minutes msati maenda.
Munandopedza bhora here sei.
Say discussion yema fines and penalties. Application yacho unochiti why are they
Zvabatika kateam.
Say 2 minutes.
Yeah.
Robunzo 2
Yes.
minutes. But
No
chiti
problem.
ma fines and penalties. Reason yekuti they are not deductible. Itine chipa reason yekuti chi.
It's not for the production of income, and you are not allowed. It's like Zimra, I think I could pay deduction encourage kuva a low break.
Yes.
Yeah,
Thank you.
deduction. kuti uve low break, ndo pane nyaya. But muzotarisawo on the other side team. Let's say ndikawana income isiri legal, ndizvo unotaxwa. Even isiri legal, apply what you call the, is it the MPC finance? You can go meet at the income. I imagine. But for my fines, Nechi, we can't promote you kuva a law breaker. Saka inowanzo fail at the production of income test. Yes, Pazita?
Discussion rema compensation.
Yes, you can go ahead. I think network yangu itachi breaker. Ndukukunzo.
Kama compensation insurance. Kuti pane ma instances ere. Mukuninza.
Yes, yeah.
Nananda funza compensation kuti pane ma instances ekuti tapiwa mari yedu then pane pakaitika damage tapiwa mari neinsurance then we tombotovaka an asset.
Yeah, it's fine. Yeah.
Than yate takapiwa neinsurance. The difference tinoita sei? Hello? I think maka mute.
Hi, Majita. So, pane the principle yekuti, is it filling a hole in profit? Or so can I cheat, for example, let's say inventory awaluzandid. Inventory gara iri in allowable deduction andid. Then if you are compensated by insurance, the assumption yekuti wato dispose of that inventory, it was sold. Ubabata. Then the question is, if we are compensated mari iri lower than what we have lost, for example, we lost inventory 50,000, then to compensate were only 45,000. Difference, the 5,000 becomes a loss. It's an allowable deduction, Majid.
Yeah.
Yes. Then tika compensate kwa, let's say for example it was a building or it was a motor vehicle. Ndizoka to compensate kwa that income at Mariata receiver from that is still capital in nature. Overbad.
Yeah.
It becomes a capital receipt. Then also let me take you another aspect. Team, let's say kuti ndogona could dispose a motor vehicle. Ndizo. Remember, there is the issue of recoupment. Scraping allowance. If I dispose at a price more than, remember, potential recoupment, it should be limited to capital allowances previously granted. Let's say, from a tax, from Zimra's perspective, toba taona kuti paitika a loss. Kuti susu the Mariawa receiver, itori less than the tax ITV. Ndizvoka, income tax value asset yangu was 20,000. Ndobva ndatengesa mota at 15,000. Team, the question ndeyekuti the 5,000, is it a scraping allowance or not? Question ndeyekuti chakonzeresa kuti umbotengesa chi, was it a forced sale or it was not a forced sale? If it was not a forced sale, what decide kutengesa your asset at a price which is lower than, then there is no scraping allowance. Scraping allowance arise. Let's say the car was involved in an accident, so was forced to tengesa at a price lower because of that damage. That's when you can claim a scraping allowance.
Okay.
Yes,
So I say please tikuti toti pa compensation ye building patambotaura then to receive about 45,000 then to constructor ye35,000 difference yaina basa ingori capture inecho.
CGT. CGT, if you still remember, if you are compensated, that's a gross capital amount, the amount you received. Then Zimura yakusvika yobva yatoti it's your gross capital amount, we less your deductions. In terms of our section 11 yeku CGT. Then tinozoona kuti pano yatinoti a relief. Relief now. In other words, if you lose 50,000, we'll construct another building with 30,000. The difference 20,000 if you not one Zimura Mazita. Saka the other 30 used to construct a similar property. Unopiwa inonzi a relief. So insurance, in simple terms, it takes the same nature as what it is replacing. If it's replacing a revenue, what was damaged or lost? Was it a revenue item? Inongoramba iri revenue. Was it capital item? Inoenda ku capital. So as long as the loss relates to a trading operation, compensation is revenue. Babatika.
Yeah, babatik.
All right. Ndatumira confirm you have already received the the cheat notes.
Yes, sir.
All right, it's fine. I'm going to share the recording on YouTube soon. Good night. Thank you, sir. Get a cross over.